I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on CyclesMan.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
What's happening with commodities?
Commodities, man. You know, when you look at, you can't talk about commodities without talking about gold. With commodities themselves, though, let me get my chart. I had the wrong chart open here. I can't talk without a chart. We had the dominant longer-term cycle in commodities is a 3-year cycle. And it bottomed back in January of 16. Okay? And that's in January, February is when we saw the low in crude oil. We saw in December of 15 the low in gold, and everything has been bouncing in conjunction with that 3-year cycle advance, or that's the wrong word, the advance out of the 3-year cycle low. I don't want to paint the impression that it's a 3-year advance, because that's not what I'm saying at all. It's a 3-year cycle, and you know, cycles ebb and flow from low to low over whatever the duration that, you know, we're talking in this case a 3-year cycle. Anyway, so that advance in general in commodities and looking at the CRB is still intact. But at the same time, it really hasn't proven itself. There's some positive there and there is some negative there. And you have to throw each one of them in the scale and kind of weigh it. It's a long-winded answer. I covered it in the January issue of Cycles News and Views. I went through an analysis because people were asking, and then you had brought it up about commodities. And I think what has sparked some of the interest with commodities is the way that crude oil and gold has been holding up, coming out of these you know, the lows from late last year, well, in 2015 now, and early 16 in the case of crude oil. I still think that both gold and crude oil are at some intermediate degree tops, and that there's at least another trip back down to retest those prior lows. In the case of gold, we should, at this time, I see nothing to tell me that the expectation should, you know, we should change that expectation. I know we've had an intermediate degree bounce in gold. It's gotten the juice is flowing once again. People are excited about it, but there still should be another trip back down before we get the higher degree low.
Yes, gold did drop below $1,200 for the first time in several weeks. Do we put too much, though, on psychological points? Oh, $1,200. If it goes above that, it's really going to rise. If it falls below that point, it's really going to drop.
That means nothing to me, the level itself, as far as a number. What means something to me is the structure. And when I say structure, was that a previous intermediate or short term or higher degree even cycle top or bottom that gold has just surpassed, or whatever the commodity or stock or whatever it may be? It's the structure. In other words, the bettering or the not bettering of a previous cycle high or low point is what's key. The value, what number is on that, if it's 100 or 1200, that's totally irrelevant to me, if that makes sense. It's all about the structure. And talking about structure, you know, that's the thing with the CRB index. This can cut two ways, and the jury's still out on it. Okay, we had the 3-year cycle low, no question. And that's being reflective of, with, you know, the advance that we've seen in crude oil and gold coming out of the December 15 low. But there are some statistics here that this could fail and fail miserably, and it's not out of the woods yet. And then you get another hard push down with the remainder of that 3-year cycle. So that's where we're at. Gold's got to, I say gold, commodities have got to prove themselves here. And with the expectation that gold is still going to make another push down into that higher degree 9-year cycle low, that's going to put some pressure on the CRB complex and could set it up for another failed and very negative 3-year cycle. So it cuts both ways, and we have to see a little more, see if the next positive hurdle can be bettered. If not, then, it is what it is.
It should be a good buying opportunity?
It will what be a good buying opportunity?
When gold starts to go down again.
Oh, yes. The 9-year cycle low. Look, I hate to, I'm almost reluctant to say this because, it is as bad as the market is beating me up on my statistics and stuff. But no, the 3-year cycle in commodities has historically been very clean. There's also a 3-year cycle in the Baltic Dry Index, and the 9-year cycle in gold has historically been very clean. And yes, it should be a hell of a buying opportunity. It really should. We just need to get that additional push back down. My expectation is that we see gold stocks hold above, because they've taken their beating. And a lot of times what you'll see is a divergence, a non-confirmation, a positive non-confirmation, where gold will push down and make that final push into the 9-year cycle low, which again I think is coming, but then the gold stocks will hold at that 9-year low. And I think the gold stocks took their beating last year. I'm not saying there's not another push down, because I think there is. I think they're going to follow. But I'm thinking that they may very well hold above their previous low, and then that sets the stage. And yes, I think it's going to be a good opportunity.
We'll have more with Tim Wood right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Wood. Tim, what's your outlook on equities?
Man, the bubble continues. Looking at equities going into the election, price was moving into some short and intermediate degree lows. I thought there was going to be one more short-term cycle down into that intermediate degree low, but as we moved into the election, we were in the window of opportunity for my intermediate degree low, and equities got a foothold on that low, and up they went. And that lasted, throughout November and the first few days of December. And I've lost count now, but I think we've been sideways now for something like 24 days. I want to say, I don't remember, but it's just completely flatlined, pretty much like back in August, and then again back in September, October, just completely flatlined. The difference here is that this time we're set up for an intermediate degree top versus back in November we were set up for an intermediate degree low. Now, I'm not saying there couldn't be a pop here. Maybe coming out of the inauguration, maybe there's a push. I don't know. Because it's so flat and the structure hasn't really broken. It's just done nothing. It's just levitated. It's like it's waiting on something. But what I do know is that we're set up, we're at or near an intermediate degree low, and this may well prove to be a buy the rumor, sell the fact type thing. The market went up with the Trump victory, and now with the inauguration, like I said, I can't rule out a pop here possibly, but we're at or near an intermediate degree low and a clustering of cycle lows coming in a little bit later, even February, March type thing. So I see any pop being short-term in nature with higher degree lows ahead.
Under a Trump administration, will it be harder to use cycles to decide what's going to happen, because he seems to be kind of a loose cannon and you never know what kind of a policy decision he's going to make?
I don't think it's going to matter any more so than what we've seen in the last year or so. You know, cycles. Let me say this. Looking at these intermediate degree cycle tops and bottoms, and I was just talking to a subscriber this morning about this, and it's a fact. You know, if you go back and you look at 2000, the top in 2000, and all the intermediate degree cycle tops that followed, the market went up into the top. You got the setup for the top. You got your monthly, or weekly, I should say, swing high. You got the sell signal. Bada bing, bada boom, and the market went right on down. I mean, it's a fact. I mean, I'm looking at a weekly chart. Anyone can go pull up a weekly chart, and you can kind of spot those intermediate term tops and bottoms. And the market it functioned properly. If you look at the intermediate degree cycle tops following, or even up into the 2007 top in October, the one in, when was that? July as well. And then all the intermediate term cycle tops that followed going down into the 2009 low, they were the same way. You know, you got the top, the market rolled, you went into the bottom, the market turned up, you went into the top, it turned down. And so the unusual behavior has really only been, you know, we saw the extension of the 4-year cycle into 2014, 15, 16 type thing. But these these last 4 intermediate term cycle tops, and I'm looking at the chart right now, you know, for example, looking back in October and November and December, it took 3 months for that intermediate term cycle top to roll back, you know, at the end of 15. If you look at this, the intermediate term cycle top in April of 2016, yeah, you had a swing high, but then the market just kind of rolled and did nothing. And then everybody remembers, surely they remember the intermediate term cycle top back in August. You know, July, August, the market was just flat. I mean, just look at the chart. It did nothing. We got the signal. We identified the cycle top, but there was nothing. It's just dead. And then we have the same thing here. We've like I said, we should have the intermediate term cycle top. If not, we should be very, very close. And we're looking at a weekly chart, we're in the, let's see, 2, 3, 4, 5, we're in the 6th week of the market just flat. So on the one hand, yes, absolutely, the cycles are still very much alive. I mean, you can see them. We can identify the tops and bottoms. It's just that there's no follow through, or hasn't been the way they have levitated at the top, and then you finally get some kind of little decline into a low, and you know, it's just not. I don't know. There's something not. The behavior is just not quite the same. I think that's going to pass. I mean, obviously, I don't, it's unusual, and I don't see that lasting. But as far as the Trump administration versus the Obama administration, I don't think that's going to make any difference. I think we've seen some unusual behavior, and I suspect that it has to do with trying to hold the market, and inevitably it does crack and go into the intermediate term cycle low. And if anything, I suspect that may change because, he may not be quite as willing, if you will, to allow the manipulation to continue, is my thinking.
On the price of oil, it's hung in the low 50s for quite some time. Do you expect that trend to continue?
No. Crude oil, like I said, with commodities, and you got to give credit where credit's due. Crude oil has hung in there. It has not succumbed to the higher degree. I say higher degree. It's sort of an intermediate term degree cycle top in the rollover and retest of that 2016 low. It just hasn't given. the cycle top is in. I mean, I can see it. It's there. The sell signal's there. There's no question about that. And the high's in place. But it hasn't given in. I think that's coming. Now, that said, I do think in the case of crude oil, like I said, in the case of gold, I do look for an undercutting of the December 2015 low. In the case of crude oil, because of the structure of this cycle and the fact that it has not given in, I think that is a very positive thing, or appears to be a very positive thing, to where we probably won't, in the case of crude oil. It doesn't look to me like we're going to violate that 16 low now. I do think there's a trip back down there, but in the case of crude oil, what I see here is that it's more likely to hold.
Is there a factor from the fact that people are buying more SUVs than ever before? And even though trucks are more fuel efficient than they used to be, they still guzzle more gas than a car does.
That's something I don't look at. I look at the charts, and as far as what's driving price, I don't know. Do I think crude oil is going back to $140 a barrel? No, I'm not saying that at all. I'm saying that we made a major bottom in 2016. We've had a fairly positive, there's this annual cycle, call it a seasonal cycle, that has some positive structure here. And so it's making a maybe what is a longer term base, a longer term bottom. I'm not near as positive on crude oil. At least I don't see it yet. I need to see this next intermediate degree low. Now, let me say this. If we see the right setup with the CRB, because I use the CRB to guide me, and if we see the right setup with the CRB coming out of this next cycle down, and it holds above the previous intermediate degree low, and we see the right statistical setup fall in place, then I would turn very, very bullish on the commodity complex. But right now, like I said, it's in that infancy stage with this cycle where it needs to prove itself. So I don't know if I answered the question directly on crude oil. The answer is that I see a trip back down to retest, but in the case of crude oil, I think it's going to hold.
Tim, thank you so much for chatting with us. And by the way, you did do an extensive study on commodities in your latest newsletter. How can people get that newsletter?
The letter is available at cyclesman.com and through a subscription, of course. And like I said, it's not, don't mean for it to sound like doublespeak. I mean, it is what it is. If this happens, then it means this. If that happens, then it means that. And so with the CRB, it's laid out. Here's our expectations if it's going to unfold positively, and here's our expectations if it's going to unfold negatively. And when I say expectations, the statistical outlook, or what we need to see for it to unfold positively versus negatively, and that's what is the unknown at this point. So it's all laid out in the letter.
Tim, thanks again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Gondry.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.